Hello, everyone. Welcome back for another weekly recap. So, kicking things off, Capital One recently announced that they will be settling that class action lawsuit related to their 360 savings account. So, in case you don't know what I'm talking about, Capital One had a 360 savings well before the pandemic, but this was a low interest earning account, so like a traditional savings account, which would earn less than, I would say, like 0.02%, right? Next to nothing essentially. And so they then launched another account called a 360 Performance Savings. Now, the accounts have very similar names, but very different products. So the 360 Performance Savings was a high yield savings account. So that was earning anywhere from 3 to 5% interest. Now, the problem comes into play is that they have been accused of deliberately not telling the current 360 customers about this new product. And by naming them very similar, it was really confusing to customers, and they really didn't know that there was a difference between the two. So they essentially missed out on lots of interest payments over the years. Now, according to the CFPB, customers from Capital One have missed out in over 2 billion, yes with a B, $1 billion worth of interest due to this I can't call it a scandal, but due to this nuance with the name, so with that, they sued Capital One and they have now decided to settle. The settlement is for $425 million. So how it's going to work is if you were a Capital One 360 customer between between September 18th of 2019 through June 16th of 2025, you will qualify to receive a portion of this class action lawsuit settlement. Now, there is no claim form for you to fill out. They have your information already. And so, what they will do is basically calculate how much interest you would have earned if you had, in fact, had the high yield savings account versus the traditional savings account. So lots of complicated math, I'm sure, to figure that out. So with this settlement, there isn't a standard payment. Every customer will receive an amount based upon a few different things, right? How much money they had in the account, how much interest they would have earned. So everyone will receive a different payment amount. Now, if you did not receive any communication from Capital One, here's some things to be mindful of. So, one, I will put a link to the class action lawsuit settlement in the caption. Let me put a note to myself so I don't forget. Um, But what I will say is do check your spam folder in your email. They have sent out email communication and they sent out postcards. So if you haven't seen anything, check your spam. And I'll just tell you what the headline is going to say because I did receive the email myself on August 2nd, I believe. I'm trying to. Okay, so it will say email notice, Capital One 360 savings account, interest rate litigation. I'll kind of show you guys. This is what it's going to look like. So I would search your inbox for Capital One 360 and see if that email does in fact pop up for you. And they are also sending physical postcards in the mail as well. So hopefully between the two, you will find it. Now, the only reason why that's important is they are giving customers the option to log into the website and sign up for electronic payments. So you will receive your payment electronically if you do sign up. If you do not sign up, they will send a physical check to your mail. Now, if you would prefer to receive a check, that's no problem, but you want to make sure they have the correct address for you on file in the event you have moved since you originally signed up for your 360 savings account. Now, next thing to be mindful of, there is a deadline for this registration. It is October 2nd. Also, if you close your account before October 2nd, you will qualify to receive a higher settlement payment. So if your account is already closed, nothing for you to do besides sign up for the electronic payment. But if you currently have your account with Capital One and you would like to receive a higher settlement payment, you will need to close those accounts before October 2nd of this year. Now, there will be a final hearing on November 6th of this year. So I'm going to assume that payments will start going out at some point in Q1 or in Q2 of 2026. But of course, as we have more information, I will keep you guys posted. So if you're not following me here on YouTube, go ahead and give me a follow. I don't only just do these weekly recaps, I do post YouTube shorts where I do share information like the 360 savings settlements and things like that. So there's that. Next thing that happened this week, President Trump did sign a new executive order that is now going to allow 401k plans to include or to offer investments into private equity and cryptocurrency. And so I have so many feelings about that. So, on one hand, that is a good thing. I think for investors, having options is always beneficial. It gives you another way to invest in the market and into something new if you aren't already doing so. But I can tell you myself, I have spoken to hundreds of people who have no clue what they're doing when it comes to their 401k plans. They're really just guessing, right? If I was to ask certain people, well, what do you have in your 401k? Many of them don't have a clue, or they just picked a target fund based upon their age. And for many, they don't know why they have the investments they currently have in their 401k. Now, nothing wrong with that. I get that people just aren't as educated when it comes to investing. But where my problem, where I have the problem, I should say, is if people already don't have enough financial literacy with the basics, and now you're offering more complex and riskier investments, I have issues with that. I think if you're going to include private equity and crypto, there also needs to be education provided. We need to make sure people fully understand what these new investments are, what they're offering. And also, when it comes to private equity, there isn't as much transparency as there is with traditional stocks and index funds. So that's the other issue that I have. Like, how much transparency is there going to be when it comes to these private equity investments? Right? There's a bit of a gray area there. So that's my one concern there. In terms of crypto, I know for a fact, like New York State, which is where I live, they restrict many cryptocurrency coins. So for the 401k plans that are going to offer crypto, how will they navigate that layer of complexity where you have some states that do allow certain cryptocurrencies and others that don't? So lots of things I think they need to consider. Now, I'm of course looking forward to seeing how this plays out. Now, for people who are more educated and who are more knowledgeable when it comes to investing, I'm sure they will really appreciate having these new options. I guess my other hesitation would be these other investments tend to be associated with higher fees. So traditionally with the 401k, your fees tend to be like 3% or less of your overall portfolio. When you start talking about private equity, those fees could be astronomically high, depending upon the service that they're offering and the investments they have in the portfolio. So you could have anywhere from 5% to 20% when it comes to private equity. So, and lots of issues I have with it. So it's a good thing, but I think there should be some nuances. Well, there are some nuances when it comes to this, and I think people should really be skeptical and hesitant before jumping into it, especially if you already aren't as knowledgeable as you would like to be when it comes to investing. Now, with this executive order, it is still up to the employer to decide whether or not they're going to include private equity and cryptocurrency as part of their 401k offerings. So I would hope that the employers that are entertaining this, that they will do some due diligence and offer education along with these new investments. So lots going on. So we'll see how that plays out. Next thing, I don't know how newsworthy this is, but I did see it earlier today and I figured I'd talk about it. So TSA is offering a deal on TSA pre-check applications. Like, how interesting is that? So right now they're offering a deal. They're calling it buy one, get one, but that's very misleading. When I think of buy one, get one, I'm thinking buy one, get one free. That's not what they're offering. So that's why the headline initially attracted my attention, because it said buy one, get one free for TSA pre-check. Oh, wow, that's great. No, it's not free. So how it's going to work is if you do pay in full for one TSA enrollment, you will get $15 off the second enrollment. But the catch is both applications must be submitted at the same time. And this deal will be good until October 31st of 2025. So not sure if that's newsworthy, but it did catch my eye. So hopefully somebody will find that useful. And I'm curious as to why they're offering that. And I'm wondering if it has anything to do with the changes that TSA made. So in case you guys didn't hear, TSA is now making it to where you can keep your shoes on when going through security, whether you have pre-check or not. And I think for many people, that's kind of why they enrolled in pre-check, to avoid taking off their shoes. So if I can keep my shoes on and still go through security, do I really need pre-check? And then on top of that, they are looking to implement new procedures or protocols to make the TSA line shorter. So if the regular TSA lines are shorter or will be shorter, and I can keep my shoes on, then do I really need TSA pre-check? So I think people will to renewing their TSA applications, and this is why they're offering this buy one get one. It could just be me. I don't know. Next in the news, this came out today, I believe. So Ulta and Target have ended their partnership, which is really interesting. So in case you weren't aware, Ulta and Target have a partnership where there, I think, are over 500 locations, well, 500 Target locations across the country that have like mini Ulta stations inside. Very similar to what Kohl's and Sephora have. And apparently Ulta and Target decided to end their partnership in 2026. Now, I am wondering if this has anything to do with the fact that Target is just not doing well right now. They're seeing lots of less foot traffic. They are seeing decreased revenue, and they have a lot of backlash in terms of PR for a variety of reasons. So I'm wondering if that's why Ulta, well, they're saying that they decided together to end the partnership, but I'm wondering if it really was Ulta pulling out because of the controversy that Target is dealing with right now. I have no idea. That is just my assumption. So let's just jump right into this week's earnings releases and earnings calls. So there were lots of calls this week. They all were kind of on the boring side, in my opinion, but we will go through them anyway. So starting first, we have AMC. Okay, let me make sure. Let's go ahead and share. Let's make sure you guys can actually see. Okay, great. My hair is like a mess today, so don't mind me, guys. It's been a busy day. Okay, so let's go all the way down. Is this what I want? No. Let's keep going. This is what I want. Yes, sweet. Okay. So AMC, the movie theater, the movie chain, they just released their Q2 earnings. So right now, revenue for them is up 2%. No, excuse me, up 36%. So AMC had a really surprising result for their earnings call. As you know, that the movie industry has been struggling for the last few years coming out of COVID. But AMC looks promising, just to kind of give you a preface on what you're going to see here. So revenue is up 36%. So this is 2024 Q2. This is 2025 Q2. As you can see, a nice healthy jump in revenue. And then we come down here. So they are still operating at a loss, right? It's a net loss currently, but it is an improvement to what we saw this time last year. So investors definitely like to see that. Now, there are a few reasons why they are seeing such good improvements in their margins. So one, they are seeing improvement in the overall box office. Customers are coming back to the movie theater. They also have improved their theaters as well, offering better food options and snack options, premium seating. And so they are seeing that this is converting more customers, and customers are paying or spending more at a per person level, which of course helps their overall revenue. So this right here, even though it is a net loss, very promising for the rest of the year, and hopefully they can turn things around and have net income and be profitable before 2025 is over. Now, in terms of their stock price, let's take a peek. See, so their ticker symbol is AMC. Pretty simple, right? Wait, why did I put that backwards? My goodness, that's crazy. So let's look. So their earnings call was on August 11th, which was Monday. And so definitely lackluster result, to say the least. So the stock price is super cheap right now. It's $3 per share. And of course, AMC has been struggling, like I said, for quite some time now. And so they are working to turn things around. And so you see the stock price did jump just a smidge before it came right back down. And now it's kind of been level for the remaining of the week. So this tells me that Wall Street has some confidence in the company, but they're not overly confident. So things are kind of back to normal to what it was before the earnings call. So not great, but not bad either. So I think for AMC, they have lots more to prove for the rest of the year in order to regain the confidence of Wall Street and its investors. All right. So Cardinal Health. I think I'll start closing some tabs here. I have like a gazillion tabs opened here, and it's crazy. It's crazy. Now, I did not like their format of their press release. It's just not. Anyway, I'll just stop there. Having come from a finance background, I'm very critical on financial documents, as you can imagine. So anyway, Cardinal Health had a pretty lackluster quarter. So for Cardinal Health, they are reporting Q4 results as well as their fiscal year. As I've mentioned in previous live streams, not every company works on a traditional calendar year. So traditionally, your calendar year runs from January to December. Some companies operate on different calendars. So for a company to report their Q4 earnings in August might seem weird. But again, every company has a different fiscal calendar. So it's also important to be mindful of that when you are looking at their financial results. So for Cardinal Health, their Q4 revenue is relatively flat quarter over quarter. Looking at their full year results, revenue was down 2%, which is still flat in my opinion. So not much to talk about there. And then in terms of net income is up 2% Q2 of this year versus Q2 of last year. And it is up 83% year over year. Now, Cardinal Health did mention that there are lots of things contributing to their bottom line. And so they are focusing on improving the experience for customers and end users, And they are also investing in new technology as well. So I think for them, they just need to focus on improving their top line and overall profitability for. And now let's take a peek at their stock price. I think their ticker symbol is CH. No, I had it here on a sticky note, but I don't have it. CAH. There we go. So let's take a peek. So their earnings call was on August 12th. And as you can see, Wall Street did not respond positively to their earnings call. The stock price took a hit and it's been low ever since. It is currently trading at $149 per share. Do they pay dividends? Yes, they do. Interesting. Okay. So I think for Cardinal Health, they have to focus on regaining the confidence of Wall Street ultimately. They had a decent year, but Q4 definitely could have been a lot better in terms of revenue and profitability. So I'm sure that is what's contributing to the stock price taking such a hit. And I don't recall seeing their guidance for next year, so I'm sure that's also an issue too. Next up, we have Cisco. I'm closing tabs, guys. I've got a gazillion of them open and I need to scale this back. Oh, let's make this smaller. Okay. So this is Cisco's press release that they did release earlier this week. I'm just going to scroll all the way down to their P&L statement. And again, I hate when they don't have variance columns. It's super annoying to me, but anyway, I digress. So for Cisco, they are also reporting their Q4 earnings. So they're reporting Q4 as well as the fiscal year. So we look at their revenue year over year. Revenue is up 7%. So that is fantastic. Now for the year over year, it is up 5%. And then we look at their net income. Net income is up 30% from Q4 of this year versus Q4 of last year. And then net income is only up 1% this year versus last year. So that's pretty interesting. So they had a pretty strong Q4, but it looks like, I guess, somewhere in the previous quarters, they weren't as profitable as they were in Q4. So Cisco does mention that while they had a great top line growth, they are focusing on controlling inventory. And that, of course, I think all companies are focused on that right now, making sure that they are managing inventory for a few reasons, right? So inventory costs money. And so you don't want to have too much inventory on hand. But the other issue is tariffs. So tariffs is going to impact the cost of holding inventory as well. So they're trying to navigate balance in that. Now, what drove their top line is AI. Lots of companies are focusing on AI and AI implementation. So Cisco is providing some of the infrastructure that they need to run these projects. So that's why they are doing really well. And I'm sure going into the fiscal year of 2026, they will continue to see high growth for revenue, but inventory and the cost of it will be something they have to be very mindful in order to keep themselves profitable. Look at their stock price. CSCO. The chart's taking forever to load. That's crazy. You guys see this, right? The chart is just taking forever. I don't know what that's about. Usage. I think this is just a Yahoo Finance website that's just really slow. Okay, let's refresh that and see if it comes up. There we go. All right, fantastic. So their earnings call was on August 13th, and the stock kind of held flat and then slowly started to decrease and took a big dip today, which is Friday the 15th. That is quite interesting. That is quite interesting. I wonder if the earnings call was midday. Okay, I see this big dip here all of a sudden randomly, and then it shoots back up, and then it kind of trails off after that. This is very, very interesting. So, what I see here is that Wall Street isn't confident as well in Cisco's reporting. And I guess I would understand that considering how tariffs are playing such a huge role in companies being able to ship goods in from other countries and how much they can ship in from other countries as well. So I think this is kind of telling me Wall Street wants to wait and see how things pan out. And I think that's kind of how everyone is operating right now. There's so many unknowns with the tariffs, the political unrest. So it's really a guessing game at this point, unfortunately. But I digress. Ooh, it said my internet was unstable. Oh, that's weird. Hope you guys can still hear me and see me. Something's going on with my internet. I don't know what that is. So anyhow, next we have Dillard's. So Dillard's, of course, is in the retail space, and the retail space has been taking quite a hit. Is this the, yeah, here it is. Let me change it. It just looks so wonky on the smaller screen. Okay, let's jump to the Dillard's press release. So for Dillard's, they are reporting Q2 earnings, and it's really annoying how they put 13 weeks ended. Just say Q2. And then 26 weeks ending is, of course, H1, right? First half of the year, in case you were wondering. So in terms of sales, revenue was up 2%. So this is 2025 right here, the 1.5. 2024, it's about 1.5 as well. So not much from a revenue perspective. Then we go to net income, which is their profitability. Net income is down 2%. And so for Dillard's, they saw lots of growth in areas like children's wear, women's lingerie, but they also are focusing on inventory. Inventory is also an issue that they are dealing with as well, which is what contributed to their reduced net income year over year. And I think that's something that all companies are going to be dealing with in terms of managing profitability is inventory. The inventory they have on hand right now is pre-tariffs, right? But anything they bring in the door now is going to include tariffs. So now the inventory becomes more expensive. Now they might have to increase prices. They'll have to order less inventory because it's more expensive. So lots to navigate right now with what's going on in the economy and in the overall world economy as well. And I think that is it for today's live stream, guys. Yep, that is it. So this week, there weren't any exciting earnings calls to go over, but these are the ones that I thought were the most interesting of the ones I had to pick from. And so each week I do try to pick the big names that I think people care about, but also try to diversify the industries we're talking about so everyone can see the different perspectives of what's going on in each industry and with different companies. So that's the logic behind the companies I pick for each live stream. So with that being said, have a great weekend, and I'll see all of you guys next week. Take care.